Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to talk about oil. I wanted to get into a little bit of things. I showed, this is a couple clips ago, I showed the inventory levels of the United States. We're outside and below the inventory levels on the crude oil inventory to the downside, which means that inventories are very tight in America. They're tight worldwide. And gasoline inventory is also very tight. So I don't think that OPEC or the world in general, just in total, they don't have the pumping barrels that for the demand that's coming up. And I was looking for some data for that. And I got some other opinions. I don't know if we'll find exactly what we want. What people do is they monitor the boats leaving and boats like big oil tankers leaving some of these Middle Eastern countries, and they monitor roughly how much through satellites is leaving and coming in. So they have a pretty good idea of what they have and if they've slowed down, if they're speeding up, if they're increasing production or not. And a lot of these places, they're saying that they never really cut back, and they also said that they couldn't really produce more either. So let's take a look. This isn't about what the satellites wants, but this is some other information that I've got for you. These are very recent articles, and I just wanted to touch on them to give you guys a different perspective than just mine. I'm like an ultra bull on oil. Why am I an ultra bull? It's the #1 commodity in the world. And if you look at just do some like basic math, all right? Oil is not just used for transportation. It's used everywhere. So let's say America uses something around like 20 million barrels a day. Of that 20 million, maybe 50% goes to transportation. So let's say 10 million barrels. Let's say battery electric vehicles hits our market pretty hard. So let's just hypothetically say, and we're not even anywhere near this, okay? We're not near this. But let's say it hits 10% of our market. We have 10% of battery electric vehicles. They displace 10% of the oil market in America. That's 2 million barrels per day. That's 2 million barrels per day. We lost from investment, from underinvestment. If we don't invest at all in oil, oil declines between 6 and 10 million barrels per day. 6 and 10 million barrels per day if we put zero money into oil. Now, we're not putting zero, but we are starving oil for production growth, and we may be starving it where some of this may pull back around the world, and we're going to hit natural declines where no matter how much money you put into it, it's declining anyway. So the question then is, well, if we have 10% of the entire vehicle fleet in one of the most largest consuming oil nations, and all we can basically take out of the market is 2 million barrels, and we lose 20 million barrels or 10 million barrels over a few years of underinvestment in the entire world. Well, how the heck's 2 million going to make up 20 million? Or how is 2 million going to make up a minus 10? It's not. That's my point. And we're not going to hit 10% battery electric vehicles till many, many years away. So I wanted to touch on this. Here's some articles that I'm reading. This is from oil prices. It's from a bunch of different articles. Some of them I grabbed headlines, some of them I grabbed some stuff in the middle. And I just wanted to read it to you guys so you know what's going on. Here it is. The American Petroleum Institute reported, this is the report of Wednesday. Every Wednesday, they talk about crude inventory draws or additions to inventory. Reported an inventory draw in crude oil. The API estimates the inventory draw for crude will be 747,000 barrels. U.S. crude inventories have shed some 57 million barrels since the beginning of the year. 57 million barrels. What does that mean? It means that we are underproducing in the world. So don't just read data and facts and just take it at face value. I mean, you can take it at face value, but like why? If we're drawing down 57 million barrels, then you have to say, well, how close are we to how much spare capacity do you think we really have in this world? Because if we're ripping through oil. I mean, we are ripping through inventories all over the world. This one, I think, is just for America or U.S. crude. We're ripping through it worldwide. So I'm not convinced that we have all this spare capacity. That's just me. It says analyst expectations for the week were a larger draw of 1.7 million barrels. The previous one reported oil inventories of 2.3, a build of 2.3 million barrels compared to a 950,000 barrel draw. And these things aren't completely perfect. You're going to have draws, you're going to have builds, and they're pretty volatile. Looking on the right-hand side, it says the oil and gas industry worldwide faces a talent gap as workers contemplate moving to renewables or leaving the energy industry altogether. A survey by recruitment firm Brunel and oil and gas jobsearch.com. More than half of the workers in oil and gas, 56%, said they would look for employment opportunities in the renewables energy sector, according to the survey. Last year, that percentage was 38.8%, highlighting the shortages the oil industry is facing as it looks to hire again, after letting go in 2020 thousands of workers in oil and gas and related services in the supply chain. The survey also showed that 43% of the workers want out of the energy sector within the next 5 years. So I wanted to touch on the potential labor shortage that is coming, and this is coming with everything, not just oil and gas, but it is hitting the oil and gas area. Now, I've got on the lower left here, oil prices projected to hit 125 in 2022. It says, in new report from JPMorgan, analysts are predicting 125 oil next year and 150 oil in 2023. And these guys, they've been pretty accurate, and they're also very conservative. They are going to continue to push the prices up so they don't look ridiculous, because they're probably thinking more like $200 or $300, but they just don't want to say it to be bold. The bullish forecast is driven by the belief that OPEC has a limited capacity to increase oil production. Wow, I've said that before. According to CNN, such a rise in the price of crude could send gasoline to $5. And on the right-hand side, the oil industry is facing a labor shortage. They don't have the barrels. This down here is this guy here. It says they don't have the barrels. It's a mirage. Malik, head of JPMorgan's EMA oil and gas research, told the news outlet. Look back at history. When we're in a scenario where the market goes, oh crap, we don't have spare capacity, that's where you see overshoots, he also said. Overshoots in terms of the price of oil. So I wanted to talk on this because, yes, I don't have all the data, and no one's going to have all this data. No one's ever going to have the full, complete data saying OPEC is out of spare capacity. They're not going to come out and say that. They can't have the entire world be worried about their spare capacity. They can't have people running to other alternatives in mass all at once. They need to pretend like they've got this spare capacity. They don't have it. And if they do, it's very small. They're already underproducing their quotas. Is that on purpose? Highly doubtful. Last time, during the last bull market, they supposedly had spare capacity. They kept saying, we'll up it, we'll up it, we'll up it. And guess what? They didn't have it. They were lying. And they never hit their quotas. They never hit what they said they were going to hit. And the price just continued to go up. And they were pumping flat out. That happened last bull market in oil. You know what's going to happen this one? Same thing. And with the money that's been created on top of this, with the underinvestment in oil that's been happening all in the non-OPEC areas, and even in OPEC, they're underinvesting too. And I don't think it's just investment. I think it's natural declines. I think it's natural that they can't pump this stuff at the rates that we used to. One, they had much higher reserves in those fields. And these fields, you can pump pretty fast. All the new stuff, it's not nearly as fast. You got to be poking holes like no other. And we're not poking the holes like we were before. And I don't think that even those fields, because we poked a lot of holes in all the best stuff, we're declining. We're going to lower and lower returns for how many holes you poke. So I am betting, my bet here is that you take an inelastic demand on the most important commodity in the world and betting that the underinvestment and that these guys don't have the spare capacity, I don't think it's there. and we've got this wave of inflation coming, and this is one of the most inflation-sensitive spots to be in. Dude, this is a perfect setup. So I know we've got all this negative news in the markets right now. Everyone's scared. This guy, I'm not. I bought some. I bought what I could. And I bought right at the support line. $6 CDEV and SM Energy 28. A little over 28 bucks. So I'm in. And I've been in. I'm going to ride this thing higher. I'm not afraid. The variant, what's it going to do? It's going to bring more oil on? No, it's going to hurt the production of oil. It's going to hurt the investment of oil. And I'm not convinced that solar is going to fill this gap. I don't think so. Why do we keep running to it? Why do we keep running to natural gas and oil and all these? It's because it's a superior fuel that you can store. You can store this energy right at use. Doesn't take a lot of minerals to build a natural gas plant. Doesn't take a lot of minerals to build a nuclear power plant. And you can store all the fuel right next to it. Very easy. So I do think these things are superior. That's why we went to them. They have higher energy returns on investments. But we're going to have problems. And the entire world, through investments, through their whatever preference they want, I think they're wrong. I'm taking the opposite bet. I think the world is wrong, and I don't think we can replace this stuff as easy as what most people think. So I'm putting money in it. I'm putting money where my mouth is right here. I'm going to sit on it. Remember, this is the #1 commodity in the world. It is inelastic. I have to go to work no matter if it's $5 a gallon or $7 a gallon. I still need money and insurance and all these other things for the family. So I'm going no matter what. Maybe I'll do stuff differently. Maybe I'll make less trips, whatever it is, until that job doesn't exist or until I have so much money it doesn't matter. So we'll see. That's my opinion. Give me a thumbs up if you guys like this content. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.